Secrets of profitability. Maximizing profitability is really just, it's more than a numbers game. It's really fun. It's a lot more fun to make money. I think you all would agree at that. I've talked to 1 million people out there and everybody says, I have more fun when I'm making money. So how do you make money? Profitability is the #1 important thing in your business. You can't take sales dollars to the bank. Profit is what translates into cash flow. So I'm going to give you a few best practices that I see out there that our various performance groups and other clients are using to help maximize their profitability. #1, your organization from the top needs to mandate a high profit culture. This means you need to know what your profitability is at any one time, have a plan and a goal and actionable items to grow that profitability and to be able to actually execute on that plan. I've seen many companies out there that have started with average profitability of, we'll say, 3%, but transitioning themselves to a high profit culture and mandating high profit in their business. Over the years, they've been able to achieve a 10+ or double-digit profitability, and this really shows in their bank. I've seen people go from being heavily weighted in debt to being debt-free and current in payables at any one time, all because of profit. This has happened without massive increases in sales volume. Granted, nothing happens without a sale. However, what happens after the sale needs to translate to the bottom line. It's critical. The real secret to high profit is selling more at higher prices, selling more at higher gross margin. If you can keep all your operating costs the same and sell more at higher prices, your profit's going to have a massive impact. You see, you have a certain amount of fixed costs in your business. Once these fixed costs are covered, the only costs you incur are variable costs. And in the home furnishings industry, those are basically credit card fees, finance fees, sales commissions, and cost of goods. And it roughly could be around somewhere around 40% or something like that. But think of it like this as well. If you can just grow sales a bit more, on average, maybe about 40% of every sales dollar that you make after your break even goes to the bottom line. So when you surpassed your break even, by the way, you should all know exactly where your break even sales volume is. Once you surpassed your break even sales volume, all the incremental sales that you make have a massive impact on your bottom line. One of the driving factors in your organization should be to achieve a higher gross margin and gross sales at the same time. It's very possible, okay? Forget about price as being the sole factor in determining why people buy. Focus on getting a gross margin that is at the top of your industry, which is 51% and above, and that's in highly competitive markets based on valid information studied on a recent retail performance report that we did. So focus your operation on achieving a 51% gross margin while growing sales. Having a selling system that does not focus on price but focuses on what the customer's needs are will allow you to achieve that. Another key ingredient is having a plan, a forecast, and a budget documented. A plan in the form of a budget and a forecast gives your organization some direction to go with respect to profitability. Start with sales. What sales volume should be expected for your organization, and how are you going to get there? What average sale do you need? What close rate do you need? What kind of in-store traffic do you need to produce that sales level? Gross margin. What gross margin can you expect? And what are you going to do to achieve that gross margin? Then your operating costs. Based on your sales volume, where should your various operating costs be? Then go over the details of administrative costs, occupancy costs, your selling costs, your advertising costs, your warehouse costs, your delivery costs, your finance costs. There's a lot of questions and discussion that should happen around creating this profitability plan. At the bottom, you're going to get a net income percentage. So executing the various actions to achieve the parts of a profitability plan will act as a guide for your organization to achieve a high profitability situation. Keep your inventory at the right level. Inventory has carrying costs. If your level is too high for your operation, you're going to incur extra carrying costs. And some people will say it's up to 35% in carrying costs. You're going to have more warehouse people, more damages. The list goes on and on. Keeping a leaner inventory will add to, and having good systems around moving the inventory quickly will allow for a high profit company. Some resources outside your company. Education is one of the biggest things to increase profitability. The highest profit stores I see out there are the ones that are led by people that are continually trying to improve themselves. They're involved in industry associations. They read books on the subject. They attend industry events. They belong to performance groups. They're not happy being the status quo. So that's back to the first thing with mandating profit. Continually try to improve your operation. Don't stop. When you've figured out how to fix and improve one part of your operation, look for another part to improve. One of our groups is called the Kaizen group. That means never-ending improvement. If you commit to never-ending improvement or a Kaizen culture, you will experience greater profitability in your operation. So as a takeaway, I'd like you to remember that keeping an eye on your sales targets, your gross margin, your various operating expenses, your inventory level are key to growing your bottom line.